Now, Labour is poised to impose higher energy bills on households and businesses in a scramble to cut electricity costs for Britain's struggling factories. Yes, officials from the Department for Business and Trade have met energy suppliers to discuss the rollout of a £1 billion support scheme for heavy industry. Well, the Prime Minister announced the scheme last year as part of the government's industrial strategy to cut electricity bills of around 7,000 energy-intensive companies. This includes car makers, aircraft factories and chemical plants. But is it really sustainable to help out these factories by imposing costs on the rest of us? Well, the former advisor to the Secretary of State for Trade and the CEO of Competere, Shanker Singham, joins me now. Shanker, thanks indeed for joining me. Britain clearly has a big problem. It's just about the most expensive place in the world to buy energy.
Yes, I mean, you're right. The energy cost in the UK is about 4 times the energy cost, for example, in the US. And because energy is in everything, you cannot run a competitive economy in this, globally competitive world with energy costs at the level that they are. This is unnecessary because the UK actually has significant energy assets that it could deploy. Obviously, we have assets in the North Sea, oil and gas. We should accelerate our nuclear program. We should have been doing that for probably a decade or so now. So there's significant things that the UK can do to basically bring more energy on stream and to increase generation. But absolutely, the energy cost is, I think, energy security and energy cost is a big vulnerability of the UK, particularly in a very dangerous world right now.
And it does seem that energy feeds into everything. When energy costs spike, the price of everything rises. I mean, everything needs to be transported with mostly oil and gas. Everything needs to be powered. I mean, it's very hard to think of a product or a service that doesn't get more expensive when the price of oil and gas goes up.
Yeah, the clip that you had earlier on was, in a steel mill. I mean, if you look at something like steel, about 40% of that product is energy. So if that energy cost is increasing, or is, as I say, 4 times the cost of energy in the US, then it's going to be virtually impossible to be competitive. And that's why a lot of our factories and a lot of our manufacturing, including our advanced manufacturing, are sort of at risk and are being shuttered. And now, of course, you have the conflict in Iran and in the Straits of Hormuz. That is going to have a huge impact. I think only about 10% of shipping of oil and LNG is actually moving right now, compared to the normal amount that we've been moving out of that region. And there are concerns also again about the security in the Red Sea. So again, if you've got energy costs going up because I think oil is now about $92 a barrel, so significant spike in oil price as a result of the conflict. And the longer it goes in, the more the longer it goes on, the more that becomes embedded. You also have shipping lanes massively disrupted, and ships having to go around Africa as opposed to through the Red Sea. It's really uninsurable at the moment in the Straits of Hormuz. So all of this is contributing to, and the way I think British people will feel this is the cost of everything is going to go up, not just because of the energy price, but because of the shipping lane disruption. I mean, if you want to look at a similar event in terms of disruption, the COVID shock disruption would be similar. And you look at the inflation rates that we saw as a result of the COVID lockdowns. We could be in that territory. It depends on how long this conflict goes on for, but we could be in that territory again.
I mean, that would be extraordinary, given what happened to mortgage rates, given what happened to inflation. I mean, the country took an absolute battering. If we're even approaching that sort of world in a sort of possibility, that should be deeply concerning. What the government did, of course, in the autumn of 2022 was to subsidise everyone's energy. At one point, I mean, thankfully the winter was mild and the cost of energy did drift down a little bit internationally, but at one point the government thought it might be spending twice the cost of furlough subsidising the entire country's energy. I mean, we simply don't have the money to do that again.
Yeah, and these are distortions piled on distortions. So they are incredibly inefficient and they are incredibly damaging to your GDP per capita, and they destroy wealth out of the economy. So what we're doing is we've got energy policies that distort the market in all kinds of ways that lead to very, very high prices. So therefore, in order to accommodate those very, very high prices, we subsidize and basically impose another distortion on top of the previous distortion. All of this is incredibly damaging to the country's productivity, the efficiency of supply chains, and ultimately it's money out of UK households. I mean, I think the OBR forecast in the spring statement was about 1.1% GDP growth. I mean, that's gone now. I think we're now in the 0.3, 0.4% region as a result of all of this. But the better thing to do if you're vulnerable, and we are all vulnerable on energy security and energy policy, the better thing to do is to use your assets to produce and generate more energy, and then use the force of competition to ensure that things are as efficient as they possibly can be. The UK Competition Markets Authority made recommendations about improving our own energy regulatory system and the grid connections, all of these things back in 2015, completely ignored.
It is extraordinary to look at the state of the market. We have produced 25% less energy in this country compared to 2008 when the Climate Change Act was brought in. Energy prices have been rising and rising and rising, and yet it doesn't look like the government wants to do a sort of big about-face on that one central policy. But Shanker Singham, thanks so much for talking us through what wasn't a particularly cheery conversation, but an important one nonetheless.